What is up, everybody? Welcome back to Stocks by the Numbers. Today is Tuesday. The market just closed. We have some earnings coming out. I was looking at a handful of companies, and I mentioned in the Discord that, in my opinion, I would actually go puts across the board. And one of those companies that obviously we can see wouldn't have worked out on the put side is Beyond Meat Incorporated, ticker symbol BYND, listed here on the NASDAQ. The company closed $7.52, up just slightly, about 1% on the day. As we see after hours, the company absolutely exploded here. This was a heavily shorted situation. Short interest, I believe, was still at the high end of that 30 plus range currently, and as of the end of last month it was around 40%. So I can appreciate the fact we have a little short squeeze going on. The company, in my opinion, kind of came out with some mixed results, and basically the way I'm looking at it, again, just my opinion, if this wasn't a heavily shorted situation, you would be seeing nowhere near this reaction, and the stock would actually be lower. And in my opinion, I actually think it should go lower. And again, I'm not trying to bash your situation. If you bought like some spec out of the money 10, 12 calls and now you're up, obviously significantly, I'm not trying to rain on your parade. Okay, phenomenal call. If you're on the long side of this, congratulations. What I want to do is I want to look at the numbers. Okay, so obviously, again, stock's up over 80%. We have a market cap of about $500 million, which now is close to $1 billion. But the company is bleeding significantly. That's what I wanted to address here. Now, granted, they also said that they're planning to really cut costs on the operating side to increase those operating margin percentages. So, I have to give credit where credit's due. There are some positives here. But overall, looking at this situation, we can see that for the most part, it's an overall negative picture. And what I mean by that is, obviously, the company is losing money. These are plant-based meats that apparently, for some reason, cost the same, if not more, than regular meat. So I personally never really understood this business model and didn't think it would be successful at all. And as you can see, right out of the gate, they were never net income positive, and they got up to 464 million back here for the year of 21. Then you can see we dipped down with big losses to sub 419 million. And now with these numbers coming out, we're looking at even lower year-over-year revenue. Okay, so I just want to go through some of these headlines together, and so first off here, it says it guides for full year 2024 gross margin in mid to high teens range versus analyst consensus of 7.2%. Okay, that's a positive, right? In my opinion. But look at this. Beyond Meat guides for full year 2024 revenue of 315 to 345 million. Okay, so we're going to decrease again. So we dropped from 21 to 22 yearly revenue. From 22 to 23 was another drop down in year-over-year revenue. And now for 2024, we're dipping below, out of that 400 million range, and sub 350, potentially even low 300 range. See, so that's what I mean. In my opinion, I'm viewing that as a negative. And I can appreciate the fact you're going to say, no, the stock was beaten up like crazy. The short interest was through the roof. This explosion is justified. I get it. But also at the same time, the fact that it's viewed as such a massive positive and everyone must now immediately cover their short position isn't really adding up to me, in my opinion. Because literally what this company just told us is that it's going to get worse before it gets better. So everyone is looking now at the fact that, they brought in, 73, 75 million for this quarter against estimates of 66.6 million. Oh, it's a beat. We got to explode the stock. When in reality, the company is literally telling you that they're struggling. The bleeding is going to continue. Yes, they're doing whatever they can on their side to try to get operating costs in check, but they're literally telling you that next quarter they're expecting to miss. Okay, 315 to 345 for the year, versus analyst consensus of 344 million. So they're literally telling you they're going to miss this number more than likely for the year of 2024, this upcoming year. Q1 revenue, 3 months from now, seen at 70 to 75 million versus consensus estimates of 86 million. And I'm seeing articles now like, oh, you know, the plan is working out. Here comes the recovery. Like, what's going on? What's going on here? This is a massive miss. And this here on this annual number, forecasting for 24 in my eyes, is even more of a red flag. Highly shorted Beyond Meat surges over 50% after quarterly report. Company says net revenue in quarter fell around 8%, which of course is a negative, to 73.7 million, but they beat the estimate of 66.7 million, so the stock exploded. CEO says company will, quote, steeply reduce operating expenses and cash use this year. Company expects revenue, right, which is below estimate. We just looked at that. Short interest about 40%. Beyond Meat targets cost cuts this year amid sliding sales, okay? Sliding sales. Beyond Meat said it was planning multiple steps to boost profits next year as the company grapples with persistent weak demand for its plant-based meat. It is common knowledge that, in my opinion anyway, I mean, I think the bulk of people feel this way, it seems to be common knowledge in my mind that there is no demand for this, and people do not like this. And also at the same time, like I said earlier, it's the same, if not more, than real meat. So if you think about it, what the hell's the point? And now they're saying that they're talking about discounts, but hold on one second. Company said it would cut operating expense, cash use, expand margins by lifting prices and right-sizing its production, and take certain non-cash charges related to inventory and assets among other actions. Said much of the company's reset towards profitable growth is, quote, coming into view. How can you have profitable growth if no one wants your product and sales are declining? Right? This is what I'm personally trying to understand. So they're literally telling you, okay, we're probably going to miss 3 months from now, next quarter. We're probably going to miss for the full year of 2024. But hey, listen, we're going to get these costs in a row. So even if revenue consistently drops year over year to 300 million and back to like 270, 220 million, it's okay because we're going to be more profitable. You understand what I'm saying? So yes, on paper, some of these profitability numbers and margins may begin to look more attractive, but if the business overall is shrinking, with everyone knowing the company grapples with persistent weak demand. How is this possible? We believe these sweeping changes, together with measures we plan to pursue this year to bolster our balance sheet, will strengthen our near-term operations as we pursue our vision of being the global protein company of the future. Yeah, no one wants you now, but in the future, globally, you're going to be the leader in the space and take over the meat industry, or faux meat industry, I should say. Beyond Meat posted a loss of 155.1 million, or $2.40 a share in the fourth quarter, ended December 31st, compared with a year ago loss of 66.9 million, or $105 a share. Analysts polled expected a per share loss of 89 cents. They lost 105. This quarter, 240. So losses accelerated by like 120%, but we're up huge. Beyond sales fell, right, but comes in above estimate with an increase in volumes offset by lower revenue per pound. Yep, that's lowered guidance technically, in my opinion. Said factors that have hurt its business are ongoing, including weaker demand for plant-based meat, inflation, and higher interest rates. I saw another article, I'll try to find it again, where they were talking about discounting their prices, right? Which means that this whole time they knew, like I said earlier, how could a plant-based meat patty cost the same as a meat patty? It defeats the whole purpose, right? And I saw something saying that they were going to consider lowering their prices. So now basically what you're saying is, you were just BSing this whole time and it didn't really cost this much, and you were being extremely, greedy SOBs, and this whole time, even charging people an arm and a leg more than you should have, you still weren't net income positive. I don't know, it just blows my mind. Like, you know what I'm saying? That's why I'm not trying to be a pessimist about it. I'm looking at what the company is telling me and looking at these numbers moving forward. It's just not adding up at all. Beyond Meat posted year-over-year sales decline for the fourth quarter, while the earnings loss was worse than analyst expectations. Still, the stock jumped. Top line number was higher than expected. 155 million in net losses on 73.7 million in revenue. They are literally losing $2 for every dollar. And this is why, again, I'm not trying to bash the whole, trying to have everyone cover the short position and, get in before the short squeeze and ride that massive wave. I'm not necessarily knocking that strategy. But again, looking at the business itself, in my opinion, this is a stock that should have had a high short interest. These numbers seem dismal. And again, the business literally, and they're telling you that demand is down, they have weak demand, and the revenue has been dropping year over year consistently. So if I was to short a stock, it would probably be one that fit that description, right? Sales declined, but were higher than Wall Street. This is breaking news. Interesting. Barron's, again, same company that, same outlet that told you it might be a, quote, good idea for shareholders to sell SMCI stock at 800. And then, of course, we saw it go back up to 900, and it is still above 800 to my knowledge. Look at this. So just the U.S. channel alone, look at this, down over 20%. International retail channel net revenues increased 22%. International food service channel net revenues increased 33%. So they cited as well in another article. I don't know, because they post these articles like as this news hits, and then all of a sudden the article's gone. I'm sure you guys know what I'm talking about. So I saw an article saying that, oh yeah, like demand is down, but like the European segment is up. And again, don't quote me on this, but I believe they're trying to push like the alternative food agenda a little bit more rapidly overseas in Europe as opposed to here in the States. I think here in the States we have, I don't want to say just more resistance overall. No disrespect to the Europeans, but again, just the way the governments are operating, I feel like they're really trying to push like the insect-based foods, the plant-based foods, right? We're seeing this push. We're seeing this push. So the fact that it's down here in the States and up in Europe actually, in my eyes, kind of makes sense. Well, again, this just says international, but I could have swore I read Europe before. I don't know where that article went. So again, the EPS missed by a chunk, by about 25%. Again, losing $2 for every dollar. Telling you moving forward that they're going to miss earnings and going to miss fiscal year. Again, first quarter revenue here, 3 months from now, 70 to 75 million. Estimates were 86 million. Keep that in mind. Revenues 315 to 345. Estimates originally 344.4. 24 plan, reduce, yep. Pricing action, right side, both in support, margin expanded, years in main core renovation. Superior health benefits and taste. Interesting. Taking certain non-cash charges pertaining to inventory that are no longer consistent with our path to profitability. See, that's what I mean. They're gonna cut costs on a product that no one's buying, that demand is down for? I'm honestly personally just not understanding. I am not understanding this situation because again, if demand is down and revenue is expected to continue to decline, but you're going to cut revenue costs to increase profitability, now you're also going to have to overprice your existing loyal customers to bump up the losses even more to try to narrow them more moving forward. You understand what I'm saying? So demand is down, costs are going to try to be cut, but prices are probably going to have to increase, in my opinion. To counter weak demand in the United States, Beyond Meat, which supplies its plant-based meat patties to fast food chains such as McDonald's and Yum Brands, has lowered prices and resorted to higher discounts. So now they're actually accepting more of a loss to push these products. Faux meat is pricier than traditional meat, a factor that has discouraged budget-conscious consumers in the U.S. from opting for the former in recent times. Yes, this is the point that I was trying to make. How can a burger made out of a plant cost more than a burger made from a cow? This makes no sense. And I said it even, it was obviously years ago before I even started this channel, but I remember as soon as these quote unquote foods hit the market, I don't even know if I want to call them food, to tell you the truth, but as soon as these foods hit the market, same thing, like the Impossible Whopper when it hit Burger King. It was the same price as a Whopper, so what the hell am I going to buy it for? What am I going to buy it for? You are literally replacing the most expensive part of this sandwich with a plant. And you're telling me it's going to cost the same amount of money. It should be 20% of the cost, in my opinion. Or at least you would think it would be at a discounted cost. But nope, it costs exactly the same. And by the way, by paying that same price, the company's losing $2 for every dollar, right? Just think about this. The company has also been able to sustain demand for plant-based meat in its international markets, particularly Europe. Whereas I saw, to my knowledge, you can correct me if I'm wrong, as I saw to my knowledge, over there in Europe, governments are pushing more for insect and plant-based food. So if the people themselves have less control and might actually be kind of backed into a corner to kind of like have to start buying these foods, then yeah, I can appreciate the fact if you're seeing a little bit more demand increase in Europe. Cost cut measures, including job cuts taken last year, of course, have also helped reduce the burden on margins from sluggish demand in the United States. Yeah. So, people don't want our plant-based burgers? Okay, I'm just going to start laying off people. And I'll lower prices for McDonald's, right? And I'll widen my losses in the meantime. It's fine. Everything will be fine. Just makes no sense to me. It really doesn't. And again, this is the one green flag, in my opinion, that they happen to beat revenue estimates this quarter. Everything else that I'm reading in my eyes sounds much more negative than positive. And now we just have some updates. Right? Okay, look. So the 2024 gross margin. Look, notice they're speaking about this on in a yearly time frame. Okay, mid to high teens, expected to be higher in the second half of the year relative to the first half. which means, just as I said before, they're literally saying we are probably going to continue to keep struggling for at least the next 1 to 2 quarters, and then we will probably bump everything up, and you'll see a big jump up in these profitability ratios and these margins in the third and fourth quarter, hopefully, to end out 2024. But remember, the company already said, even though, again, this is a positive, I guess we can say, but again, this is just a forecast, so we don't know for sure that this is going to happen. But also, the company literally also said that they're probably going to come in lower than estimates for yearly revenue, right? So that's what I'm saying. The company is coming out saying there's weak demand and we're going to see shrinking and a decrease in sales again for another year. But hey, it's okay because we're going to increase our gross margin percentage. I don't know. I just feel like, in my opinion, that they're over pumping in my eyes. They're overinflating the 1 or 2 potential slight positive catalysts to try to outweigh the fact that no one wants this company's products. It's too expensive for no reason. And in my eyes, in my opinion, the company was heavily shorted for a reason. And I appreciate the fact they're saying they're going to cut losses. And again, I appreciate the fact they beat on revenue. And if we saw a bump here after hours, understandable. The fact that the stock 70, 80, 100%, in my eyes, that is just ludicrous. "2024 operating expenses are expected to be in the range of 170 to 190 million, weighted slightly more towards the first half of the year." We've seen companies, what about PayPal? What about PayPal, who consistently beats on the EPS and the revenue side? But if, again, margins, slightly lower by 0.5%, the stock absolutely tanks from 70 plus down to new 52-week lows of 50. But a company like this will be rewarded just because it was heavily shorted, right? I mean, I appreciate the short game, and I understand the short squeeze strategy. But in my eyes, this company deserves to be worth less, not more. We can see the stock still sitting at about 13 and a quarter, up over 76% here after hours. So market cap, we're looking, probably like 800 million in change, maybe close to 900 million. Again, numbers decreasing, losses widening year over year. They just lost 155 million to make 76 million. And again, moving forward, going to see a slight bump potentially in Q2 up to over 100 million, and then drop back down to 80 and back down to 67. So even they know, look at this, even forecasting moving forward, it looks like the best days of this company are behind it, in my opinion. How do we go from 406 million, 464 million, down to 418, 336, low 300s, according to them, not me, 362, 365? This is 5 years after your biggest year, and you're going to be bringing in forecasted 100 million less for the year. And also, one last thing, the debt on the company as of last quarter was close to $1.25 billion on a sub $500 million company. So the debt was literally more than double the market cap of this company before this move here today. And even with this move, if we open here, that'll bring, again, the market cap 900 million, debt 1.2 billion as of last quarter. Long-term liabilities outweighing those assets more than 2 to 1. This is what I'm saying. This is why, in my opinion, this is a situation that I am highly, highly convinced in after everything I just read. In my opinion, I am like 98% convinced that this stock should be shorted. In my opinion, it deserves to be shorted. It should be lower. And again, Not trying to bash you guys who bought calls or jumped in shares hoping for this pop. Congratulations. This is an astronomical return. I am so very happy for all of you. But in my opinion, if we turn around a couple of months from now and it completely gives back this entire pop and is actually lower than where it was here at 7.5, and it's down at 7, sub 7, believe it or not, I would not be surprised at all. And in my opinion, I would feel it was justified. If you disagree with how I'm looking at it, that's fine. Let me know down in the comment section. And again, don't just play it off the fact as, oh, I bought, out of the money $10 calls and I'm up huge. This stock is awesome. Like, don't, you know what I mean? Don't turn around and say that. If you truly believe that the demand will come around, revenue will come in, if you truly see value here in the longer term, let me know how you feel about it in the comments section below. But I'm telling you, based on what the company just told us, we can expect this opposite reaction probably 3 months from now. Because if they're seeing a 70-80% pop on short interest from beating on revenue by 7 million, again, they said 70 to 75 million next quarter on estimates were originally 86 million. So if we're seeing this big of a run on a revenue beat, then this may only be the calm before the storm roughly 3 months from now, next quarter on a big revenue miss. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone made a couple of dollars. Thanks for stopping by. Have a good day.